Thanks for the beat, brother. What's up, beautiful people? This is Pope with Stock Doctor Traded. I just coming out taking my dog for a walk after a hell of a day trading the market the day before the CPI released tomorrow, 8:30 a.m. Eastern Standard Time. And I gotta tell you guys, we have some things to talk about, all right? There's just really too much for me to put any sort of like formatted video together or anything like that. I just wanted to go take you guys for a walk because there's a lot of fluff swirling around in this market. I've felt this kind of vibration from the market before, and it was a long time ago. Okay, so just quick recap. You know, if you weren't trading the markets today, I'll just let you know, like basically, just like the last time the CPI data was about to roll out the day before, it seems as if something leaked. Now that leak tends to be this Bloomberg report that comes out saying, yep, most likely we're gonna be dealing with 8.8 inflation and 1.1 year over year. Now guys, when I talk about it, like, and I say, you know, it's got whispers of some sort of other event from the past. Basically what I mean is the vibration is that eye of the storm of a really bad downturn bear market, and what's actually going to happen as people start to try to speculate as to what's actually the reason for all of this happening. I mean, in the end, you guys know, I've already told you, it's liquidity being sucked dry out of the markets. But the vibration right now is god awful. We got to talk about it. Basically, we're at a moment where right now no one really actually knows who to trust, and you can see it across the narrative being spread by everybody who's talking about finance. Okay, so on the YouTuber realm, I'm seeing YouTubers eating each other apart, cannibalizing each other, calling each other out for small details and little things, calling everybody a shill or a liar or somebody who's trying to profit off this thing or that course and everything like that. And in the end, it's kind of one of the symptoms of a bear market. People start just kind of chewing each other up. I'm seeing it with the CEOs and people starting to come out and attack JP Morgan, as they should. And basically what if you sit back after days and days of watching these narratives play themselves out, what you're going to see is that no one knows what the fuck is going on right now. And it's just liquidity, people. It's just liquidity being sucked out of the market. So it looks like the CPI data leaked again, or it was just overall fear of the CPI data being bad. It will probably be a bad print. I'm much more on the fact that this will lose to expectations, because the year over year of the summer of 2021, what we're comparing it to, was fairly flat in terms of inflation. So that means we don't have that little jiggle room to make it look a little sweeter. So I'm down here on the Homie Park here in Costa Rica. And I'm just taking you guys for a little spin. It's a beautiful cloudy day. I think it's actually perfectly descriptive of the eye of the storm that we're headed into. And this is what I really want to talk about. There's not really any format. I can't sit down and create a bunch of videos and graphics to break down what I think is going on. It's just, I've been through several bear markets, and here's the thing. There's a couple characteristics of them that are really, they need to be clear cut, and they need to be identified. And we need to acknowledge that this is what we're going through. Okay, first off, a lot of people have lost a lot of money. All right, so number one thing amongst the population and the culture as a whole is they're feeling a little about it. If they're not losing money, they're sitting in cash, and cash is losing money on this high inflation. So there they are, kind of grumpy and sad about it as well. Here's what you have to understand. There are a lot of people that are losing money right now that have no idea until they look at their next quarterly report. Saber, come over here. Saber, come on over here. Come say hi to the people. Come on. Come on. Sam, here, you sit with me, hon. Now, I told you guys before, bear markets do not last as long as bull markets. So hold on to your butts. It's not going to be the end of the world, but this is going to. We're like right at the precipice of a huge downturn about to happen to us. And it's basically just going to continue to spiral off of itself for the rest of the month from here on out. Tomorrow we have CPI. Prepare yourself for the worst. Which is meeting, I mean, all of it's the worst because it's bad inflation. It's bad inflation. If it makes or misses by 0.1%, it doesn't matter. It's bad inflation. The liquidity is still drying up. Quantitative tightening is still on the platter. And, you know, let me just like loosen up about this because like the market swung down at the end of the day and swung back up to finish it off. God damn, did you see AMC and GME holding up real tight with AMC tippity tip tapping on the 16s? God, that was pretty. Rock on. And did you guys even like check out Microsoft? What was up with Microsoft today? Down like 4.5%, like just rolling down the hill the whole day. It was ugly. And have you guys noticed that SPY is just not trading with its top 5 anymore? Like, you know, it used to be you could just watch Apple, Microsoft, Google, and maybe a bank stock or two, like a JP Morgan or a Bank of America, and you can get a pretty good idea what's going on with the SPY at any given time. Everything is just being traded in algorithms. Everything is just flowing in the same exact patterns, whether it's small cap growth to mega cap stock value. Everything, when you overlay the charts, is insane. You seeing that? Damn, people. And yo, did you cats see that Twitter was up like 4% and some change today, even after the news? Don't you think that was a liquidity sweep? I mean, how many people thought that, you know, Twitter was gonna go down after the Elon Musk deal didn't go through? How many people were betting it was gonna go down? And then it went up 4%. That, my friends, is how the algorithms rock our plata, our money. That's how they get it. Did you see that? And I don't know about any of y'all watching Redbox RDBX at all, but that was pulling back with no pops. So wasn't it interesting that AMC and GME were popping, but Redbox, the 2022 squeeze play of the year so far, other than Natty Gas, is not reacting when everything else is? Look for volatility in the coming week on Redbox. Make sure you guys watch out for the fake out on the CPI print. It might go bad and it might pop up. A lot of times what I think the algorithms are doing is they're actually bringing the price down well before it, expecting the results, because I think it's fairly easy to tell if the CPI is going to be good or bad. And so they'll bring it well down below the levels that they want to sweep out, and then they'll fire it up exactly when the bad news hits. And we've been seeing that play happen a lot lately. Now, I don't know how it correlates to them having the second CPI print in a row somehow getting leaked out, you know, for whatever reason, you know, like an hour before, just like last time, an hour before the actual market closed. So we'll see if they do the same thing they did last time, which was a fakey and a breaky to the upsies. And I would say it's 60-40. I mean, because they could also just expect that we're all expecting the unexpected expectedness and then, you know, reverse that, you know, flip that script on us. That's what I would do. So if they're gonna flip the script on us, then we're heading down. We'll see. So we're getting hit from all sides here, people. All right, dollars going up, rates going down. That means money is moving back into bonds, away from equities. We have natty gas shutoffs, and in 3 months there's going to be full-on shutoffs to Germany for natural gas. So keep an eye on that play. It's already pulled back a lot. It was up in pre-market today, fell back on down by the end of the day. Keep an eye on for another run at natty gas. Check out the stock ticker BOIL if you're interested in playing it. That's an ETF. That's a leveraged ETF, so also be careful when you're paper trading it. All right, and we are going to keep getting hit one after the other, with news report after news report after news report. It's going to be earnings every single day, in the morning and the night. Thursday, Friday, we have JP Morgan and several other banks, their earnings are coming out. It's going to have a huge impact. Tomorrow, CPI data comes out before the market opens. That means we're going to probably see a big rip down and a big rip up, all in a short period of time in the morning. So just, get yourself ready for the volatility. Once the bank's earnings come out, the bank's earnings are going to be terrible, and their forward guidance is going to be even worse. That's what we're really looking at, is the downward guidance of what they're going to give. That's the first thing coming up on the docket for earnings. And that's coming out right away, people. So yeah, we've got our hands full over here. And so I really want to talk about something that frustrates me, and that there's this constant talk about buying the dip just basically because it has dipped, and dollar cost averaging and everything like that. This doesn't make any sense. I'm seeing some very popular YouTubers saying things like, well, I know in 1 to 2 years or whatever, this thing is going to be, worth more than it is now, even if it goes down from here. No, you actually don't know that. You actually don't know what happens in a bear market. You don't know what companies survive, what companies don't survive, especially technology companies that aren't able to turn a profit from advertising revenue. And especially companies that can't seem to make an EV that is rated as the top #1 EV in aftermarket, repair costs, speaking of Tesla. So, I think it's just so irresponsible for some of these YouTubers to be talking about buying the dip. You don't need to be worrying about that, my people. You don't need to be worrying about some sort of missing out on some bull market that's going to happen. If the bull market's going to happen, it's going to happen for another 10 years or so running. Maybe it's 5 or 6 between a couple skips in the road. But that's what's going to be. You don't need to be clamoring into this dollar cost averaging idea. It's absolutely irresponsible to tell a bunch of people to just be, buying into these lows, knowing that we have a lot more bad news ahead. The recession is going to make everything a lot worse, right, Saber? Yup. Look, she's depressed, and it's just seeing people. All right, so the two things: seeing other YouTubers sitting around criticizing other YouTubers or calling them out for things they do in their private life, whatever like that. That's bullshit. All right, be cool, Jack. Be cool. We don't have to eat ourselves, cannibalize ourselves. There's plenty of fodder in the mainstream media and the way they're manipulating us and lying to us right now. And two, buying the dippers. Listen, I do not care if you build your whole audience on the buy the dip mentality. You're going to start to teach people put the peaks, right? Because there are wonderful opportunities when you're seeing things rip. Remember when we used to just look for stocks that were on their way down because we were in a bull market? Oh, what's low today? What feels low? Because I want to buy that dip because I know it's going to rip. Well, it's the same research the other way around. All right, what's firing off today? What's peaking? What happened the last time this thing peaked in the past 6 months? Did it pop off and then head down? Probably. So that's the strategy. I don't understand telling people to keep buying the dip. These people have already lost a bunch of money based on the advice given from these YouTubers. And now they're like, well, you don't want to miss the bottom. What bottom are you worried about missing? We have way more bad news to happen. You'll know it's the bottom after the market mechanics fail. The money market switches from $1 a share peg to 99 cents a share, and the entire market mechanics crash. Everything will tip out, and then you'll be at your bottom. Thank you very much. And I just can't understand anyone else who's not realizing that. We're headed for a major market mechanic failure event. All right? This isn't about the market pricing in inflation or Fed hikes, rate hikes, anything like that. The market can't price this thing. The market doesn't price these things in. All right, the market is a bunch of algorithms looking to take advantage of retail investors. So the market prices in what they think they can sell to the retail investor and what they can sell on that narrative in the mainstream media and all these bullshit YouTube channels that are not, well, actually, I didn't mean to really say that. Like, I'm not going to even delete it, but that's not bullshit YouTube channels. I really just mean like Bloomberg and CNBC and the bullshit, like Seeking Alphas and Market Watches and some of the crap that they feed us is just unbelievable. And we have to be able to get through this, and we have to be able to get through this stock market. So understand that there's nothing wrong with being a bear in a bear market, and there's nothing wrong with being a bull in a bull market, but it's very important that you analyze and be honest with what market we're in. And we are definitely in a bear market. So let's act accordingly. Don't you think, people? You know? Otro día en Paris, so it's another day in paradise. I love this little spot. This is where I come to clear my mind, and so I thought I'd come and clear my mind with you beautiful people. Here's a dad sliding in on the boat launch with his kid. Bang! Okay, so what are some things to expect? All right, we are going to have volatility. It's going to go up, down, and sideways. So decide what kind of trader you are going to be. I would be a cash-heavy lurker who's looking to grab a couple scalps over the next few days, all right? Because there are going to be serious swings. I mean, if earnings for banks look positive, then go ahead and go long on those in the short term, but I would not play earnings specifically. I would just, the one play that I did is I grabbed some put options this afternoon just before close. So I was actually riding those puts down as a day trade throughout the day. It hit the bottom, sold them off, then it fired back up, which I was happy to see. The imbalances came out at the last 10 minutes before market close. And that fired the market up even more. And that gave me the perfect opportunity to buy in at like 410 after market close. Actually, no, it was right before, it was the last minute right before it closed. And then it fired up again after at 410. And then I walked away because I wanted to come talk to everybody. So, hey, Saba, come on. Just being a curious little dog that she is. Come on. All right, so I wanted to talk about this out in nature with you because this is one of those it's a cloudy, kind of half stormy day. We are in the eye of the hurricane. And it's about to get a lot worse, and we don't know how much worse it's going to get. But you keep an eye on the reverse repo program, people. It's definitely going to come down to that in terms of market mechanics failing. It's going to be something to do with the money market funds, and those are being levied by the reverse repo program. So keep an eye on that. More to come. Just wanted to rap with you for a little while. There's just too much going on. It's time we just talk, people. So hope you enjoyed the setting. See you in the morning, people. Peace. Saber, say what's up, stock doctor peoples? What? Yeah, that's the rap face. Saber Sage on the flavor rage. He's bucking and rocking each and every day. Saber Sage. Oh, come on, Saber. Come on, give some good face. Slow it down.
For the record, I'm done trying to make y'all comfortable. For the record, you ain't trying to grow, then it's done for you. For the record, lab on me going all the way. For the record, ain't trying to link, no time to waste. For the record.